Hi guys, welcome to another episode of Small Steps to Freedom. My name is Tando. If you're new here, be sure to hit that subscribe button, give this video a like. We talk about all things personal finance and financial freedom, so stick around. On this episode, we'll be talking about how you can actually improve your credit score. So if you haven't already checked what your credit score is, or if you don't know what a credit score is, be sure to check out this video right here that I did explaining exactly that. But if you do know what your credit score is, then you've checked it out and you're just blown away by how bad it is. On this episode, I'll be giving you 5 tips that will help you improve your credit score. So let's get into it. So I'm sure you understand why you need a good credit score. For the big purchases in life, for example, when you want to get a home or you want to get a car, you might need a home loan or you need a car loan for that. So that's where your credit score comes into play. You might be looking at a credit score right now and it's not looking that great. With your current credit score, you may be getting bad interest rates, or you may not even be able to get loans, for example. But I'm going to share 5 tips with you that will actually help you improve your credit score actively every single day. Can you guys hear the dog in the background? That's my neighbor's dog. Let's excuse the dog. So my first tip is making your payments on time. This one may sound a little obvious, but you definitely have to make sure you remember it every single time, because remember, it makes up 35% of your credit score. So this one's a really important one. So make sure you're making all your payments on time. Make sure you automate your payments so you don't even have to remember. If you are unable to make your payments for any reason, pick up the phone, call your creditor, call whatever company is expecting that payment from you, and make some kind of payment arrangement with them. A lot of creditors will be more open to actually restructuring your payment plan than having you actually miss that whole payment altogether. And my second tip is in terms of your credit utilization. So with your credit utilization, you want to make sure that it's not too high, because if your credit utilization rate is high, it indicates that you rely too much on debt. For example, you have a credit card with a credit limit of 100,000 rands, and from that 100,000 rands, you have a credit utilization rate of 80%. So you're using 80,000 rands of that 100,000 rand limit. Essentially, what you were doing is you were telling the banks that I need a lot of credit to get by on a month-to-month basis, and that is a red flag for them. So you want to make sure that you're not using up the entire limit that is available to you. You're only using up a reasonable limit. Talk to your financial advisor about that. Remember, I'm not a financial advisor, but your credit utilization rate definitely should not be too high. Tip number 3 is relating to the length of your credit history. So this one makes up about 15% of your credit score. What it looks at is how long you've had credit available to you. So the longer you've had credit available to you, the better you look to banks. If you don't like having too many lines of credit open at the same time, what you can consider doing is having one credit card that you have open for a really long time, for years and years and years. On that credit card, you can set up a payment for music subscription to Spotify or iTunes. That payment would go off every single month on that credit card. You can set up an automatic payment from your checking account to your credit card to make that payment every single month. That way you don't miss that payment, and you benefit from having that credit card open for a really long time, and it helps with your credit length. To recap, we've talked about making your payments on time, your credit utilization. We've also talked about how you can actually get your credit length to be as long as you possibly can get. If you've actually used those tips, let me know down in the comments below. I'm very interested to know. And tip number 4 is what type of credit you have on your credit report. Secured credit actually weighs more in terms of ending to your credit score. Make sure you are picking your lines of credit wisely, and talk to your financial advisor about that. My final tip is your new credit. And by new credit, I mean how many new lines of credit are you opening for a specific amount of time. A really bad sign for creditors if you are opening a lot of credit accounts in a short space of time. If you go and try and open a net bank credit card with Discovery, and then you go and get a personal loan, and all in the space of 3-4 months, that's a really big red flag for creditors. You want to make sure that you're not opening too many lines of credit, because that makes you look like you're desperate for credit, which is not a great look, especially when it comes to the important things in life where you want to actually get a home loan to buy a house, for example. Those are my 5 tips. I really hope those actually help you. If you are working towards improving your credit score, let me know in the comments down below. Share with the community so we can all flourish. Until I see you on my next video, that's bye for now.